Ah, yes, the good old days, right? There he is, Eugene Profit. He used to block kicks for the New England Patriots. That's the old logo there on the helmet, too, I think. He left the NFL in 1991 after a leg injury, and now he's scoring big on Wall Street.
Lipper says the Profit Value Fund has had the best performance of large cap growth funds this year as of the end of April. We are in the midst of greatness.
Take you back to the old days, sir?
Absolutely.
Yeah.
And the fund's doing great.
Well, yeah, it's a lot more fun. I had fun playing football, but at least on Monday morning, I'm not as sore.
I was going to say, you don't have to take painkillers, really.
Not as bad, right?
What are the similarities? I mean, you know, blocking kicks, managing money. What are the similarities?
You're in front of a wide-scale audience, and at the end of the day, people know whether or not your preparation was good and whether or not you win. And I think that our performance shows that you don't see us looking at our data day by day, month by month. But at the end of the month, when we show our performance numbers, everyone's aware of it. And good or bad, you have to stand by it. And it's the same thing with football. Real
accountability. You got to keep score.
Absolutely.
And there is probably a playbook as well, depending on what the market's doing.
Let's hit the phones. We've got Chris with a phone call. Hi there, Chris.
How you doing? Yes, I bought Atmel last year at $19. And I was wondering, I mean, I wrote it down all the way down to its low. And I was just wondering what your year outlook is on it, if I should buy or sell. Thank you.
Yeah, I'd be a buyer of Atmel here. I think it's a small semiconductor company that a lot of processors sit inside the smart devices you have in your home and other places. Atmel, for some reason, seems to trade a little bit in parity with the Japanese yen. Don't ask me why that is, but it does happen. So right about now, I think semiconductors in general are attractive, but Atmel is one that we're looking at beginning to buy here.
Okay, another phone call now. Oh, you got a price quote on that?
Yeah, down 43 cents at $13.86. You just can't wait to just
I love the phone calls. Mark in New York, what's your question?
Yes, hi. It's about GE. The question is, how low can it go? How high can it go? Your reasons for both, and at a P of 40 and almost a non-existent dividend, should I dump?
You asked $1 million question. I could spend 3 hours giving you the answer, but just real briefly, a lot of people think GE is expensive at $40, but it has a very diversified set of assets. They're in financial services, they're certainly manufacturing, they have great management. They've sold off along with the market in the past year. To give you a downside price target or an upside price target is pretty difficult. I think what you do here is you ask yourself the question whether or not the story has changed at General Electric. I would say it hasn't. We don't own it. It's a little more expensive than we look for in that size company. But I think that if you're more of a momentum growth type investor, it's a good entry point for General Electric.
What's your biggest holding in your fund?
Our largest holding is Berkshire Hathaway, followed closely by EMC, so you can see we're on both sides of the spectrum.
Somebody downgraded EMC today, all of their, cut a lot of their revenue and EPS on that one, saying that companies were learning how to sort of bump up their own capacity utilization in their storage, and that could be bad for EMC. What do you think about that?
I'm buying. They're wrong. I think that EMC, they've said that about EMC for years. When a Hitachi deal, fell apart, when Hewlett-Packard deal fell apart 2 years ago, they started to push the death knell for EMC, but it's basically has almost a monopoly in large-scale data storage. They moved down to mid-scale with the acquisition of Data General. If you believe the Internet's going to continue to expand, if you believe that data is going to continue to be important, EMC is very well positioned, and it's down from 102, even though in the last 3-4 weeks it's up from 25. I think that even here, if you're buying EMC with a long-term perspective, you do well.
Where do you get your research? Do you listen to the analysts on the street when they make their calls, or do you have any favorites in particular?
Well, the good news, David, about being independent is that you can take research from everybody and discard what you don't like. And so we look at everything, but primarily we do our own in-house research. I don't go out and check to see whether or not Ford is making cars. I know they are. I mean, I can look at analyst reports for that. But it's really what you do with that data once you get it. CS First Boston, Tom Galvin, has been, pretty good through the last 3 years with some of his overall strategic market analysis. But when you get down to stock by stock, there's not one particular house that I would point to other than to say, if you are a mutual fund investor and you look at some of the mutual funds and they perform well, and you can see that in the performance, then that manager's doing something with whatever research he's using to pick the right securities at the right time.
A little bit of using your gut, too?
At the end of the day, yes. I think we like to say that when you look at price to earnings, you look at price to book, and all of the different measures that we try to get a handle on what makes companies work, it's that last dose of common sense, whether or not
Right.
this, at this particular point in time, is demanded by the marketplace, whether or not the marketplace is going to continue to demand it, and whether or not management is not going to run off, you know, with the fruits of that.
Let's hit the phones. We got another call from Texas. Don would like to ask a question. Hi there.
Hi there.
What would you
I
like to know?
appreciate you taking my call. I'm just curious about the wily spider. How is Ink2Me in your thought?
Well, Ink2Me in the B2B space, obviously, if you've held it for a year, you've not been a happy camper with security as it sold off with the rest of the internet. If you bought it, were smart enough to buy it 3-4 weeks ago, you've done very well. Actually, the last time I was on, someone asked that question. You talked about accountability. And I think it was at the $5 or $6 level, and they asked, and I said, maybe you should sell it here. There are better stories out there. Well, that would have been wrong for the short period of time. I think from a long-term perspective, risk-reward relationship, you can find better stories out there. But if you're a very aggressive investor and you want to speculate to some extent, Ink2Me is as good a shot as any.
Okay, another phone call now out to the West Coast. Steve in California. Hi, Steve.
Hi. I have a question if now's the time to get into Carrier 1.
Well, again, in the telecom space, you go back to WorldCom, I like the telecom sector in general here. I think that it certainly sold off quite aggressively, and being more of a value investor, it's quite appealing to me to enter telecom at this point in time. However, that being said, I'd like to move into some of the larger names. I like the WorldComs a little bit better than the Carrier 1. But because whenever you have a sector that's sold off, the larger names tend to give you a little bit more downside protection. That's important to us.
Carrier 1 shares down 15 cents at $1.55 per share.
Still ahead of the Money Gang, we're going to keep talking stocks.
To ask a question, you can call us at 1-800-304-FNET or email us at moneygang@cnnfn.com.
The value of your home